With the halving coming up in less than 2 weeks, there's lots of talk about supply shocks, balances on exchanges shrinking. So we set the record straight on Bitcoin supply and demand dynamics and what this means for price. Also, what does yesterday's eclipse have to do with Bitcoin mining and the Bitcoin halving? And just a reminder, with the CPI print coming out tomorrow, remember, what you're being shown is not what's really happening. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. The solar eclipse is one of the phenomenon where humans everywhere collectively celebrate the same thing. Here's a cool view of the eclipse from the view of an airplane. But you know another event that's even more special because it combines people celebrating the same event, but at exactly the same time everywhere across the world. The Bitcoin halving. People globally stop every 4 years to recognize and celebrate when Bitcoin supply becomes more scarce and more people's property rights are protected everywhere. Swan will be celebrating the halving from 1 p.m. to 4 p.m. Eastern on the 18th, next Thursday. Sign up for a chance to hang out with some of your favorite Bitcoiners, where we'll be playing Minute to Win It, and you'll have a chance to win tickets to the Pacific Bitcoin Festival, where you can get cool and swaggy fits like this jacket. Sign up using the link in the show notes for the halftime show that we're doing again on April 18th from 1 p.m. to 4 p.m. Eastern. With the halving coming up, you see lots of posts out there about the supply on exchanges dwindling and how somehow there's going to be some explosive supply shock that's going to cause there to be no more Bitcoin able to be bought and the price exploding. This is not factually true. Actually, it's mathematically false. Every day moving forward, there will be more Bitcoin in supply than there was the previous day. There's roughly 93.7% of Bitcoin in supply today, and that number will only go up from here. And technically, people think that when it hits 21 million, it'll stop. It's actually Zeno's paradox, in that the number continues to get cut in half. But that number will be so small that it will be crawling forward with the new supply that's coming out relative to the amount that's come out before. So Bitcoin supply doesn't actually stop. It just continues to get smaller and smaller. The only way that we would be able to track the supply available to be bought and sold on exchanges is to actually know the price at which every single Bitcoin holder, institution, ETF holder, and everyone in the world would be willing to sell at. And again, that's impossible for us to know. Let me highlight something cool. When I was out in LA the past several days with a bunch of Swans and others, I got to spend a bunch of time with Swan's VP of Business Development and NBA champion, Matthew Dellavedova, and his teammate, Andy Varejao, who's a global ambassador for the Cleveland Cavaliers. As a former athlete, this was obviously really cool for me. But one of the coolest things that I got to do at the Swan Salon was I got to meet one of my favorite fellow Bitcoin educators in real life, Matthew Crater. Bitcoin University is one of the best follows on Bitcoin, and Matthew is one of the best educators out there. Although he doesn't come on screen like I do, he posts all of his content for you to see on screen so you can follow his thoughts in real time as he makes his videos. He posted a video today on what the halving actually is and sets the record straight for a lot of people that have questions out there. Take a look.
So this is what the halving is not. It's not like a stock split. The quantity of Bitcoin that you hold will not be doubled. It will not be cut in half. The price of Bitcoin will not be cut in half. It's nothing like that. In order to understand the Bitcoin halving, we need to remember how Bitcoin miners are paid. So when a Bitcoin miner or mining pool successfully mines a block, it receives two forms of compensation. Number one, it receives all the transaction fees paid by transactions that have been included in that block, and these transaction fees are based on supply and demand and set by the free market. Secondarily, the Bitcoin miner will receive the block subsidy, which is currently 6.25 Bitcoin, or approximately $450,000. If we want to take a look at the blockchain, here's the most recently mined block as I'm recording this. If we click on it, we can see what the fees look like. The total transaction fees are 0.206 Bitcoin, and then when you add the 6.25 Bitcoin miner subsidy, you end up with 6.456 Bitcoin, approximately $461,000. As we said, the block subsidy is currently 6.25 Bitcoin per block. The halving is when this is cut in half to 3.125 Bitcoin per block on approximately April 20th, 2024 of this year, when we reach block height 840,000. And we can see at the time of recording this, we're at 838,000. 383. This is what the halving, sometimes called the halvening, is. And this halving happens every 210,000 blocks. You get a new block in Bitcoin approximately every 10 minutes. And this halving is hard coded into Bitcoin software. 210,000 blocks, with each block being mined approximately every 10 minutes, works out to be about 4 years, which is why we have the halving approximately every 4 years. Bitcoin's halving also allows Bitcoin's final supply to asymptotically approach the maximum supply of 21 million coins by cutting the issuance of new coins every 210,000 blocks by half. Now, the block subsidy started out at 50 Bitcoin per block when Satoshi launched Bitcoin in January of 2009. Block subsidy was cut in half to 25 Bitcoin at the first halving, November 28, 2012. The second halving, it was cut to 12.5 Bitcoin on July 9, 2016. And the most recent halving, which many of us were around for, was when the block subsidy was cut in half to 6.25 Bitcoin on May 11th of 2020. The halving year, interestingly enough, is always a U.S. presidential election year and a leap year. We don't know whether this is by design or coincidence, but it is kind of fascinating to contemplate. I'll put a link in the description notes below to Clark Moody's Bitcoin dashboard, which has a lot of very interesting data. If you look at halving versus block time, we can see the different block times. So blocks on average come in every 10 minutes, but there is some variance. Sometimes they come in much more quickly, sometimes they come in much more slowly. But if we get the average block time of 10 minutes, the halving will take place on April 20th of this year at 1:07 approximately.
Okay, back to the solar eclipse for a second. There's always talk about how Bitcoin's bad for the environment and how it uses up all of the energy. Well, that's not actually true. The solar eclipse actually proved this to be another false narrative out there about Bitcoin. When the solar eclipse happened, 13 gigawatts of solar energy disappeared from the grid, causing prices to skyrocket. So what did Bitcoin miners do? They did what they always do. They returned that energy back to the grid to stabilize prices and give consumers more energy to use. One of the most fascinating things about Bitcoin miners and the industry as a whole is that they can respond very quickly to any sort of stimulus or environmental changes and impacts that happen. Because with the switch of a button, they can turn off their machines and provide that energy back to people who need it. One of the other narratives out there is that Bitcoin actually makes organizations less efficient. Well, MicroStrategy yet again bunks this one. Without implementing every cloud and SaaS tool under the sun, they became the 7th most efficient organization in the world by market cap. MicroStrategy now contributes $12,625,196 per employee relative to their market cap. So like Caitlin Clark, who we saw play in her final collegiate game as they lost in the national championship to South Carolina on Sunday, Bitcoin continues to be an asset all unto itself, having risk-adjusted returns that are in another stratosphere compared to other assets. So despite what the media says, you have to cancel out the noise. Like tomorrow, for example, nearly every major bank and institution out there is calling for a 3.4% inflation print, which is weird. It's like they coordinated it or set a number so that the federal government can create a fake number to beat this. Whatever the fabricated number is that comes out, just know the reality you're being shown is different from the reality you're actually facing. Like this pitch right here.
No. Oh, that was a gift for Reed Garrett from Junior Valentine, the home plate umpire.
And like this cliff face, the economy that we're living in is just an illusion, and it's propped up on debt, which is why 1 in 8 households expect to not be able to make the minimum payment on their debt in the next 3 months, or why more than 60% of all the debt that the U.S. government creates is now mandatory or automated spending. And while Jerome Powell points the finger at the fiscal authorities for putting us on an unsustainable fiscal path, just remember, every dollar in circulation is created only by and through the Federal Reserve. Gordon Johnson calls Jerome Powell the gaslighter in chief.
Jerome Powell is the gaslighter in chief. And let me explain what that means. Janet Yellen couldn't issue $3 trillion in debt this year, nor could Congress continue to spend recklessly without the Federal Reserve printing money to fund it all. Think about this. The Federal Reserve is the only entity that can legally print dollars. Without them printing that money, we couldn't run these massive deficits. Think about this. We are not in a wartime economy. We're in a peacetime economy. We have 5.9% nominal GDP growth. Since 1990, nominal GDP has averaged 4.8%. We're at 5.9. Despite those facts, we're running a fiscal deficit, the likes of which we haven't seen since World War II. We have debt to GDP at 122%. In 2000, it was 58. With Volcker, it was 40. And you have Jerome Powell and co. talking about rate cuts. This is reckless, but it's this recklessness from the Fed, their money printing, that is allowing Janet Yellen to issue the debt, that is allowing Congress to spend recklessly. And all of that translates into inflation for the masses.
So while optimism in the world globally continues to plummet, and in the U.S. economy specifically, small business optimism plummets to 11-year lows, Bitcoiners can only see a bright orange future, because we've seen a lot worse than this. We were idiots 5 months ago, completely foolish 5 years ago, and 11 years ago, no one would even listen to Bitcoiners. So keep stacking. You're not alone. The future is brighter than you think. Gen Zers are more likely to own cryptocurrency than they are stocks, and 22% of millennials own cryptocurrency. But in the future, that's not just going to be cryptocurrencies. It's going to be Bitcoin. And with that, we're signing off for the day. This is Dante Cook with Swan.com. Happy stacking.